Parker, we're back, and we're back. We're back online.
Back in the saddle.
But like, it was so much better being in person,
It was.
right, Lauren?
Yeah. Yeah.
You guys need to take the podcast show on the road.
We do. We got to get over to Austin and come on and hang at the Bitcoin Commons. Have you got a little corner office for the once bitten duo?
We'll make a corner office for you guys.
Look at that, Lauren. It's not every day you get an opportunity like this. But it was amazing to see you in person, mate. Like the first time that you got to meet Lauren, I believe. Right? You didn't catch Lauren in Miami that time.
No, I don't think so. I bet you. I don't know if it was the first time we met in person, but Bitcoin 2022.
Yes.
We saw each other in person there. I don't think I met Lauren there, and I wasn't at 2023.
Oh, well, that's right. Okay, fine. You were there for 23. You were selling Safe's books. You remember? Safe. It was brilliant.
Selling books in person. Great.
It's like if there was anybody in the world to embrace child labor, it was Safe Announcements. And
hey,
embrace
I'll be right
it,
by
did he?
I mean,
if I ever catch Lauren at a conference, you can sell books with me any day.
if I get sats for it, then
Yeah. Well, it was Caitlin and Lauren were, man, you spent the whole time there with industry day and the 2 full days, and the queue never ended.
Nope.
And Lauren and Caitlin were like sorting the books, taking the payments, getting the books under Safe's nose. It was great. It was great to see.
We got stopped at the VIP area because we didn't have VIP tickets, so it took like 10 minutes for us to get in because he needed us to be in there to help with the VIP.
That's right. He was signing books in the VIP area, and they wouldn't let in the child labor.
Tight rules, on certain things.
Yes. He's signing books of principles of economics, and his child labor was checked at the door. Love it. doesn't get any more Bitcoin than that, really, does it? So, Parker, what did you think of Prague?
It's phenomenal. Loved it. Great conference, great people, great dinners, with you and the fam.
Yeah.
And yes, certainly a bucket list type thing. I hope to be able to make it back. And yeah, overall just had a great time.
And a great talk, mate. I've seen a lot of your presentations online. It was the first time for me to see one of your presentations in person, and well done, well delivered. So I'm sure the guys would be very keen to have you back. And I wonder actually how often you guys think about like the difference that you've made to the people in Europe that have grown up in the Bitcoin space, reading your work as I have, and that goes for you and Breedlove and Sailor, obviously, and everybody else that we were listening to back in the day. Pierre and Bitstein, Trace, come back to us, Trace. All will be forgiven. I hope.
I think so.
Yeah, I think so.
Yeah, that was one thing too that I got to meet a lot of people. Sold a lot of books, signed a lot of books for people, and you never know until you get to meet people in person or travel to a different place to know how well work translates. Because a lot of the work that I've written about, I talk about Bitcoin in a much more fundamental way than just the dollar or the Fed, but I talk about it a lot in relation to it because it's what I know very well, and so it was a great thing to be able to get over there and meet a lot of people who came up to me and talked about how they'd read parts of Gradually Then Suddenly and that had been impactful on their journey. And so, just to reinforce that it's not just, an echo chamber here in the United States. And so that meant a lot to me. Yeah,
for sure. And I know so Gradually Then Suddenly, if people haven't bought it, there's the book. If you're watching on YouTube, get over to the safeityn.com website. Do you have a shill code or a discount code you want to use, or?
No, just it's it's the only way I'm selling books, so I don't,
Right. So get over to safeityn.com and shout out to Consensus Network because they graciously accepted you at their stand for you to sell your books and sign as many as you did.
Yeah, that was another thing. Just, yeah, and I do hope to work with those guys on translations, but don't have a formal relationship with them, but they welcome me in with open arms, just a total Bitcoiner move. And so I really do appreciate those guys.
Well done, Nico and team. Right. So Lauren has, believe it or not, the first question for you. I know you're used to this.
Shocker.
Yeah.
No, give me your best. Do
Okay.
your
So
worst.
Lauren, now you've got it written down here. What how are you going to deliver this?
Like, okay. Am I supposed to deliver it?
Yeah,
Or
what
am I
you just
supposed
yeah,
to say it?
go for it. I just wanted you to see what the actual chapter of the title was. So do you want to read the title of chapter 3?
Out.
Yeah, go for it. Yeah. Yep.
Do I like do the whole thing?
Just that.
Okay.
Yeah.
Okay, this is a lot of pressure, okay?
Not the whole chapter. Are you sitting comfortably, boys and girls?
part, like,
Yeah.
like,
Yeah, that.
Bitcoin is not backed by nothing.
Okay.
Okay, so why did you put a double negative in the title?
Yeah, you
But
see, she's
I
been
thought
a
you were gonna
grammar
ask-
queen.
I thought you were going to ask, what is a double negative?
I was gonna.
Actually, why don't you ask that? Explain why.
Okay, so
Whoa.
basically, my
Yeah, go ahead.
my dad was like telling me what a double negative was. I'm like, okay, maybe I can ask Parker if he can explain it better.
Okay.
So you
Well,
have to go with that now.
I'll answer both questions, but a double negative is essentially a negative that cancels out another negative. So Bitcoin is not backed by nothing. You could also say that Bitcoin is backed by something. And generally, whenever you have two negatives that essentially cancel each other out, it's grammatically improper to do and frowned upon. But the reason why I did it in this case was very intentional, because a lot of the skeptics of Bitcoin that don't have a better explanation for why its purchasing power is over $1 trillion and why it hasn't failed over 15 years will say that it's backed by nothing. They'll say Bitcoin isn't backed by anything; it's backed by nothing. And oftentimes people will say that the dollar is backed by the U.S. government or backed by the U.S. military or any government's currencies. And so I did that because it was basically to counter the argument and be a little bit controversial or cheeky when people say that Bitcoin's backed by nothing. The counter to that would be say Bitcoin is backed by something, but it wouldn't be as clear that it was actually intended to prove the counterfactual of people saying that Bitcoin's backed by nothing. And so the statement that Bitcoin is backed by nothing isn't a double negative. And in order to properly, make it clear that that is what I was addressing, was to use a double negative, say, no, it's not backed by nothing, which inevitably means that it is backed by something.
So reverse psychology. Okay.
Yeah, or just to be more parallel with the argument against it.
So do you remember how I
Um,
explained
it
what a
was-
double negative was?
so-
Kind of exactly the same.
He said something that you didn't say. He
What?
said it's frowned upon. So that made actually a lot of But that makes more sense now.
Good. Good. Because not your father said exactly the same thing. It makes more sense. Okay, good. That's why we need mentorship.
Yeah, and the other thing people say is that Bitcoin isn't backed by anything, and I can't say Bitcoin is not backed by anything. Like that I would have had to say Bitcoin is backed by something, and so I was trying to basically prove that, or the argument that I make establishes that the claim that Bitcoin isn't backed by anything, or that it's backed by nothing, is not correct.
So do you remember what was it Mummy that said? So did he make a mistake in the title, or was it someone?
Parker never makes a mistake. No.
This is the second time in a row, just because these are technically the only two chapters that have incorrect grammar, I believe. But the last one was Bitcoin obsoletes all of their money.
Yeah.
using obsolete, which is only a noun. Also, I'm using it as a verb, which it is not. So all the other titles, like Bitcoin is common sense, Bitcoin cannot be copied, Bitcoin is not too volatile. They're all the others are grammatically correct. These last two that we've done are both intentionally grammatically incorrect.
Yeah.
And the lesson is to these kids that sometimes you can be grammatically incorrect if you're doing it intentionally, but it has to be intentionally.
All right.
Yeah.
There's a lot of incorrect and correct in that sentence.
It
feels good. It feels good to break a rule every once in a while, you know?
It does.
damn straight it does, especially if the rule makes no sense. So Claire said, do you think you made a mistake? And that's when I said, no, Parker doesn't make mistakes. And Samuel says, everyone makes mistakes. Even Parker. I'm like, yeah, I'm sure he's made a mistake in his life. But I guarantee you there is no mistake in this book, and certainly not in this title. And he's going to have a very good explanation, which you've just shared with us.
Yeah. Yeah. It's just like when I looked at all the other, Bitcoin is backed by something. Bitcoin's not backed by anything. It was the only thing that could work to counter this particular skeptic's argument that Bitcoin is not backed by anything. To say the opposite.
Do you have any further grammar questions? No?
No.
Do you want to read the whole chapter aloud before we get into it?
No. Okay. It's just I was wondering if I wanted to sound like narrator, like a narrator.
Like a narrator.
Yeah, I thought I was supposed to do the whole thing.
Yeah, you did. You did very well.
Okay, thank you.
Yeah, okay.
Yeah, well,
any further questions?
No, I think I want some ice cream now.
Okay.
Yeah, ice cream well deserved. All right. All right, bye. Thank you.
Bye. Great to see you.
Yeah, see you soon, hopefully.
Okay, mate. Right, so we got plenty to get into. Let's get straight into it. Popular misbelief. You and I, we've both reread the chapter this afternoon, or your morning time. I know. I've got plenty underlined here, but I'll hit it over to you. What first jumped out at you when you were rereading your own work this morning that you're like, I really need to drill down on that particular sentence or that particular point?
Well, I don't have the book immediately in front of me right now, which is, it's so there were a few different, but I think, like a couple ideas from the start, which the whole chapter is designed to help somebody understand, the counterpoint to when people say that Bitcoin isn't backed by anything. And that one of the key ideas is figuring out what people even mean by like a money being backed by something. And that in the context of, I talk about, in this chapter, like why the dollar has value. I talk about dollar and its relationship to gold, because at the dollar's inception, it was backed by gold. And that is where that general saying of backed by comes from. The dollar was a fractional or a fractional representation of gold that people could convert their gold into and then convert their dollars back out of into gold. And that when I started to write this piece, it was, I really began by saying that it was going to be backed by cryptography and all these different components of Bitcoin. But then as I was writing it initially and what I refined in the book, it's that when you think about, well, if the dollar was originally backed by gold, and then today people will say, well, what's the dollar backed by today? And they will say the government or military. But reality is Bitcoin is more akin to gold than it is to the dollar, because the dollar doesn't actually have inherent monetary properties. Gold did. And the saying doesn't really even make sense if you were to say, well, what backs gold? Because if you take the saying all the way back to its origination, was that some commodity actually backed the form of money, the form of paper money or the fiat money. And that if it doesn't make sense to say, well, gold is backed by a military or guys with guns or the ability to tax, it's actually all money gets its value based on the credibility of its monetary properties. And then being able to understand Bitcoin in relation to the dollar and gold and whether or not it shares the monetary properties that originally caused gold to emerge as money. But then what I really analyze at a core function in this chapter is, well, if the 21 million fixed supply is what gives Bitcoin at its foundational level a credible monetary property, a form of money that can't be printed, what actually secures that? What ensures the integrity of the 21 million? Because it is actually not some government that backs any currency, or today in the context of the dollar, it's not actually backed by gold. So the properties themselves have to be what, quote, back the money, or said a better way, allow for a form of money to actually be functional and viable in coordinating and affecting trade and exchange.
Right. I've got some underlined all over this, by the way, which we can delve into. And I'll help you. I'll kick off with where to go. I like okay, let's go here. Gold's limitation and ultimate failure as money is the dollar system. And without gold, the dollar would never existed in its current construct.
Right. So I think that is a really important point to understand, that and there's something in there for the people like the dollar maximalists as well as the gold bugs, because you know, when you start to accept for the dollar side of it, the dollar really does not have any inherent monetary properties, and that its entire existence literally came that it was convertible for gold. And that at some point between when that began in the 1800s and then really, matured in the 1900s, the dollar was ultimately severed from gold. And the fact that the dollar could be severed from gold and could become this form of money that didn't actually operate in tandem with gold, or that it couldn't be converted to gold, and that was no longer necessary to its functioning as money, albeit, in my view, only in the grand scheme for what will prove to have been a short time of history, that the fact that that could happen demonstrated that gold had failed as money. And that's an important point to anchor to, because even if somebody who, and I don't think that somebody has to understand gold in order to understand Bitcoin, but a lot of people that have keyed in and understood the problems with the dollar system, that have looked to gold or possibly other commodities as money, as a solution, it's really important to accept that there had to be a failure in order to get here to where we're at in this world of broken money. And if there was a failure, and if the money is broken, which a lot more people accept than those who accept that Bitcoin is the viable form of money that everyone's going to converge on, I don't say it's not rational, but when you go through the logic to think that we're going to go back to something that's already failed, and that some solution that would necessarily have to optimize for the failure would be necessary to actually solve the problem, becomes very logical. And so ultimately, kind of what I mean by that is that gold was susceptible to centralization, that gold had limitations as money that necessitated the dollar functionally as a technical or technological solution to gold's limitations. And so if if gold didn't have those limitations as money, the dollar would have never existed. It wouldn't need to have been paired with a dollar. But that also, if it hadn't had the limitations that it did, that it couldn't have been severed from the dollar, which it was in the 1970s, which is how we've gotten to this world where the money could just be printed in an unfettered way without any check or balance from a physical commodity that came out of the ground. And so that really kind of keys into that point, because if you're looking for a solution of like what could actually solve the problem or predicament we're in, if you're anchored in the past but don't accept that there was a failure that allowed us to get to where we are, it causes you to anchor in that past world for a solution when in reality it was never actually viable. And so yeah, I could go on, but that was the gist of it.
And so now we're going to move into like this idea of credit, the system in which we exist today. And I'll read again, and you can delve a little deeper. The size of the credit system is several times larger than US nominal GDP, and it is orders of magnitude larger than the base money supply. Now, you've got some figures here as well. As of time of writing, and this was back in 2019, so I don't know if you've got an update on the figures. Let me know in a sec. There is 73 trillion of dollar denominated debt in the US credit system, but there are only 1.6 trillion actual dollars in the banking system. That's crazy.
Yeah. So the quick update on that, and I'll be right within, a trillion, is that 73 trillion of debt is now 99.6 trillion. Okay. So just there. So in all of history, the US created 73 trillion of debt, and then 26 trillion has been created, or 26 to 24 trillion has been created in the last 5 years. And then the Fed created $5 trillion over the course of 2020 to 2022. And so the 1.6 number that you quoted there, at the time, the total dollars in existence would have been about 4 trillion, and a little bit less than half of them would have been in the banking system. So when the Fed increased the money supply by 5 trillion, it functionally went from 4 to 9. So more than doubling over the course of 2 years. The amount that's in the banking system is probably like 4 to 4.5 trillion right now. So tripling. So you could look at that in one way as delevering the system by putting more money, but in reality, which we can talk about, the supplying of money is what causes the credit system to grow massively. So the reason why the credit system could grow from 73 trillion to 99 trillion is because of the additional dollars. So that for each dollar that's put into the credit system, the actual amount of debt grows by multiples of that. But one thing I want to, so like the absolute magnitude of the problem is too large for any human mind to truly understand, because you really can't relate to what $1 trillion is in terms of actual value in your day-to-day life. But there's an important thing that I talk about in this piece, which is important for people to understand, which is what gives the dollar value. Because it really isn't because it's backed by the government or it's backed by taxes or the military. And to understand that, and this goes back to the prior questions, that the dollar started as a fractional representation of gold. And so it was a reserve-backed currency. And that in the 1970s, when the convertibility of gold to the dollar was permanently ended, that completed the process of the dollar shifting from a reserve-backed currency. You can take these dollars and actually get the underlying commodity that was originally put in the bank, to a debt-backed currency. So over that period, people have been using dollars and been going into dollar-denominated debt. And so these debts started to grow, and people would lend dollars and relend dollars and relend dollars. And what morphed was this credit system where there were a small fraction of dollars relative to dollar denominated debt. And the reason why that relationship is so important is because when you live in a world where there's very little amount of money and each dollar has been lent many multiples over, that is actually what creates very high present demand, regardless of whether it's, quote, backed by any commodity or not. So, and when you think about what it means in the real world, what that debt is the debt is claims on real world assets. In some cases, in other cases, it is claims on, in the context of the US government, the ability to tax the American citizens. But if we think about real world assets as the most tangible connection to a commodity money like gold, that if, say, in 2019, there was 73 trillion of dollar denominated debt and only 1.6 trillion dollars in the banking system, well, that debt was, say, an auto loan or a mortgage on your house, such that if you don't work for dollars to demand dollars to repay the debt, then you literally lose your car or you lose your home. And so you have to work for dollars. And if the system as a whole is constructed in a way where the amount of debt dwarfs the amount of dollars by 40 to 1, then regardless of whether or not everybody or any individual is not in debt, the system as a whole is, and that tethers the value of the dollar regardless if you print a massive amount. There's way more dollars that are owed. And so the dollar's value, the way I describe it and the way that I think makes the most fundamental sense in the world today, because it isn't backed by the government or it's not backed by guys with guns or taxes, or maybe the dollar bonds are, and so in some very derivative way, is that the dollar is scarce, but it's only relatively scarce, and it's scarce relative to the amount of debt that exists in the world. And that while it's relatively scarce, and scarcity is what gives money value, the debt in that debt system that's many multiples larger than the actual number of dollars is also what guarantees that why they will have to print a lot more money. So the dollar is relatively scarce, but it's becoming less and less scarce because the amount of debt that is in the system dictates that they will always have to print more. So it's kind of this, two-sided idea, which is the debt is actually what tethers the dollar in value because of its relative scarcity, but it's also what ensures that the dollar is progressively a worse and worse form of money, because it's also the mechanism that forces the Fed to be in a position where they have to print more money, or that credit system, which coordinates all the economic activity, literally collapses on itself.
Man, it's a head fuck for a lot of people, because especially if you come to Bitcoin and you're here for Bitcoin for the finite supply and the scarcity, and then Parker's saying, but yeah, the dollar's scarce, but it's only scarce compared to the amount of debt in the system, which again, at time of writing, you nailed it. It was 40 to 1. I don't know what it is now.
It's like, the way to think about it, like the problem as a whole is larger. The amount of dollars have become a lot more abundant relative to the amount of debt, because each time that system attempts to collapse, they have to print more and more in order to sustain the overall size. So, and that, they're going to have to do that again. So it's like on a debt to dollars basis, the ratio is now lower. So you can look at that as quote, deleveraging the system, but the system as a whole is more indebted in absolute nominal terms by 26 trillion.
Another thing I want to sharpen the plebs tools with is this idea that the US dollar is backed by governments and military, government, and taxes. And you do a good job here in a paragraph, and you go on to say, however, the dollar is backed by none of these, not the government, not the military, and not taxes. And here are the killer points. Governments tax what is valuable.
Correct.
Okay, so riff on that. So the plebs
And then the
understand.
next part of that sentence is things are not valuable because they are taxed.
Right, exactly. Okay.
Yeah.
So
So
please, like this needs a little bit more finessing. So let's go again. Governments tax what is valuable. A good is not valuable because it is taxed.
right. So that let's start with the second part, because
Mm-hmm.
oftentimes when people are pressed with this question, well, why is the dollar valuable? Right. And also that is a necessary question. And so one of the reasons why I address it in this chapter, but also throughout the book, is that money is always relative to it. It's not subjective, but it's always relative to some other form of money. And so, and oftentimes when people are critical of Bitcoin, they don't admit, or they don't approach it from a perspective of humility where they really don't understand the dollar. But the dollar, at least in the context of the United States, but it's also the global reserve currency, is the best guidepost because it is what is used by more people today than any other form of money. It's the largest monetary system. And that when people are pressed with the question, well, why does the dollar have value? Some people will say it's a collective hallucination. Some people will say it's, a belief system. Go back to our chapter that we recorded last time on the podcast that was Bitcoin obsoletes other money, to dive into why it's not. But it's not a hallucination. It's not a belief system. They will then say, well, it has value because it's backed by the government and the government has the ability to tax. Well, what the consequence of that statement would be that something is of value because the government taxes it. And if you think about it that way, you'd say, surely that can't be the case. Something can't have fundamental value because the government taxes it. And that's essentially what you're saying when you're saying that the dollar has value because the government has the ability to tax. Water's not valuable because the government taxes it. Water's valuable because we need to drink it. Money is valuable because we need money to coordinate and facilitate trade. And the world and different local economies converge on certain forms of money because of the properties that they have that make them better or worse at facilitating trade, and that the government taxes the things that are valuable as money because they have properties that make them viable and efficient in coordinating trade. So the question to go back to is like, well, they started taxing gold because that's what everyone was holding. That they turned gold into coin money because that is what everybody was using as a store of value. They didn't begin taxing it randomly because nobody valued it, right? And so a lot of that's just baked in common sense that the government taxes things that are valuable. They don't just go pick out some random thing that a collective group of people have figured out that they all value for some random unexplained reason and say, oh, we're going to tax this. No, the people have to actually have that item and value it in order for the government to want it, because if the individuals need it or need to demand it and it has value for some reason, then the government will inevitably want to tax that thing, because you can't tax people for things that they don't hold, right? So it's really two sides of the same coin, but the common sense of it is that something doesn't derive its valuable for the fact that it's taxed. That's what someone is saying when they say that the dollar is backed by the ability to tax. And the common sense other side is just that the government taxes things that are valuable.
Yeah, and it says similarly, military secure what is valuable.
Correct. So, yeah, the other thing that people say is that, the dollar is valued because of the US military. Well, go back through check your history that, even if it's not just mercenaries and soldiers for fortune, you know, militaries have to eat. And if they're, if something's willing, another way I think I said this was that, militaries protect something that's valuable. Things are not valuable. For the opposite reason, and you actually have to fund the military, right? You actually have to actually pay people and incentivize them, even if they're the most patriotic people in the world, to put that thing of value ahead of, or put themselves in danger in the interest of that. And so, so to think that the dollar is valuable because there's some military, go back to Rome, right? You have to actually pay an army, and then that army secures the thing that is valuable. It is a symbiotic relationship of, can you actually, ensure rights and provide security. But if you don't have a money that works to to pay people to defend it, then they're not going to be there to defend it. There's not going to be anything of value.
And just to hammer home on this point, you use examples of Venezuela, Argentina, and Turkey, all have governments, militaries, and the authority to tax. Yet the currencies of each have deteriorated significantly over the past 5 years. So, if currencies are backed by the ability to tax, by government and by military, why is not every single currency of every single country doing just fine?
That's one thing that, because a lot of this is to kind of help somebody that's actually interested in Bitcoin to understand maybe some biases or correct some biases. And one of the just kind of obvious realities of the world is that in every instance of fiat currencies hyperinflating, which is a fiat currency is the currency of the government, right? In each one of those situations, that has been true, that the military exists, the authority to tax exists, the government exists. So if you're attributing the dollar having value for one of those reasons, then you have to go, at least, you don't have to go to all 50 of them, but you got to be able to go to one and say, well, why was it not true in that instance? And then how is this different? Because what I would put forward is that it's not different, and that the actual wrong assumption is that money derives its value through the government or through the ability to tax, or through the existence of a military. And the fact that there have been literally dozens of fiat currencies hyperinflating, that establishes for you, if you are anchored to that bias, that if that were true, I have to understand why it wasn't true in this broad swath of all of these instances where the currency lost literally 100% of its value, where all those things were true. And I put out those arguments and it is common sense. It's for all of those reasons. You don't have to go very far, which is things are not valuable because they're taxed. They're taxed because they're valuable, and that militaries don't, you know, they don't exist for the reason that there's a form of money to protect. They protect things that are valuable, and you need a good form of money to actually fund a viable military.
So you finish up with, ultimately, a government cannot dictate the value of its currency. It can only control its supply and who has access.
And that is a fact, right?
It's not backing the US dollar.
It's not back. Yeah. Yeah. Those things are not backing the US dollar. And that like, this is a fundamental thing. Both of those two statements, like, if somebody is struggling with the idea of what backs the dollar and believes that it is associated with any of those things or anything related to the government, it is that government cannot make people value the dollar. And the only way they can try to manage its quote value is via its supply. So if you or we live in a world that is heavily indebted, and the Fed is currently restricting the supply of dollars. Relative to certain assets, the Fed can increase the value of a dollar by subtracting the number of dollars, but only by that. They can't show up your door and demand that you sell your goods for less money, because you might not actually be able to produce the goods if you're charging less money. right? So the only tangible way that the Fed can quote manage the value of a dollar is by either increasing its supply or decreasing its supply. No other way. And as we've seen play out, that as they've massively inflated the number of dollars, there's a flood of dollars competing for a relatively fixed amount of goods and a fixed amount of company and a fixed amount of people producing those goods that can only make the goods more expensive because people actually have to produce things in the real world. Money is coordinating the trade to do that. There just happened to be a lot more money flooding the system, which ultimately shifts the prices in many unpredictable ways. But it can't make people value dollars more, especially not as you're rapidly inflating the supply of them.
Right. And a perfect example over the last 4 years, as you highlighted, the amount of, I mean, what did we go from? You said 70,
73 trillion to 99 trillion in fixed liabilities, fixed debt. So, and that's also something I like to reiterate for people too. This is a number that comes directly from the Federal Reserve. Like, I'm not piecing together a bunch of random data points, and it's also not unfunded pension liabilities or derivatives. These debt figures are just things that are traditionally vanilla debt, like your home loan, like your auto loan, like credit card debts, like student loans, corporate debt, municipal bonds. It is federal treasuries, that figures in there too. That's like the total system, but it's 73 trillion as of 2019. That 73 trillion was 53 trillion in 2007, prior to the financial crisis. And now it is 99.6 trillion as of the last quarter that the Fed reported.
And the actual dollars in the banking system, you said, went from 1.6 to circa like 5 trillion right now, 4 or 5, 4.5, whatever. And we had lockdown. And how many businesses went out of business? So at the same time that we're having this flood of liquidity into the system, we're losing goods and services hand over fist. And so when people sit back and they're scratching their heads, they're like, oh, cost of living crisis, this is crazy. What's causing it? It's like, guys, we have.
Right. No, so I wrote an article too that's on my blog. We can link to it in the show notes. I can't remember what it was called, but it was on inflation. And it was around when Paul Krugman was claiming that inflation wasn't, that they had fixed inflation. But it made me think there was like around the time of the lockdown, Elon Musk went on Joe Rogan and he said something that was just very basic common sense. And he said, in order to have things, people have to make things. So I think to your point, if at the same time you're rapidly increasing the money supply, and then what were they doing? The government was going into way more debt in order to pay stimulus checks and PPP loans, whatever they were, and to basically fund consumption. But if you're doling out a lot more money to fund consumption at the same time you're shutting an economic system down and literally producing less goods, what happens? The dollar value of those goods starts to cost more. It is, common sense. That is technically what happened. That's functionally what happened. It is what happens every time they go on a money printing binge to both prevent the credit system from collapsing, but then to expand the credit system without also recognizing that that whole function itself is actually what is destroying the ability of the economic system to produce more goods, which is what makes our lives better.
Krugman, eh? You can't see that. Amazing. All right, so we've got the credit system. I think we've done justice to that. Now, back to the title.
But the point of the credit system that I don't want to be lost, and I always like to come back to the summary when we get down a little bit of a rabbit hole, is that if the dollar does not derive its value from the government, the ability to tax, or the military. And the reason why this discussion around the credit system is so important is that the credit system in overall size still dwarfs the supply of dollars, even when they go out and print $5 trillion over the course of 2020 to 2022. Because there is a logical question. Well, hey, if I hear that they produced 50% or over, 100% more money than existed, yeah, inflation's bad, but why isn't it as bad as that? And the reason is because the dollars are still, despite the fact of becoming much less scarce, they are still relatively scarce, and they are scarce relative to the amount of debt in the system. And the introduction of the dollars actually is what induces the system that was already over leveraged and unsustainable to grow larger. And so this point is, in order to understand what backs Bitcoin and its monetary properties, you first have to understand why the dollar has value and why the dollar is degrading in value and what is dictating why they have to print more money. And there's a piece in there where I talk about how, yes, the dollar is relatively scarce, but it's only scarce relative to the amount of the size of the credit system. And that relative scarcity is also what dictates that it becomes less and less scarce, because the introduction of dollars ultimately causes the credit system to expand, which then dictates more dollars be supplied. Otherwise, the credit system will collapse. Bitcoin is not relatively scarce. It is finitely scarce. And while the dollar is relatively scarce and scarce relative to the credit system, Bitcoin is entirely divorced from the function of credit. That the mechanism that gives it monetary properties are actually inherent to itself. They're not functionally borrowed previously from gold and now inherently tied to the size of its credit system.
So there's one killer end of the paragraph here. Everyone needs dollars to repay dollar denominated credit. So yeah, I guess an easy way to look at it, if it's 40 to 1, 40 people need that $1 and they're going to fight each other. Right. And that's just getting worse. And every time you print money into the system, that doesn't alleviate the problem.
Yeah. It makes the ratio lower, but it makes the absolute problem larger. And they're both relevant. Right. And another way to think about it is, imagine you have a mortgage on a $500,000 house that's $300,000, and that you have an income of $50,000. And you say, well, how'd you ever get a house that was worth $500,000, and $50,000 income? It's like, well, when you got the house, maybe it was worth $350,000, and you got, lent to you at 6 to 1 to your current income. And then say they print a bunch more money, but you lost your job. Well, you still have the mortgage, so you got to do anything to get another job because you really need dollars. So they've printed money, but you've lost your job. Or say they've doubled the money supply, but your salary is your salary and you haven't lost your job. You've got to go out and find dollars. Otherwise, if you don't pay your mortgage, your house is gone. Right. And then if it's not 6 to 1 in terms of debt to your income or savings, it's 40 to 1. Like, if you think about, always think about kind of like an individual context and then multiply it to a much larger problem, because, in short story, the Fed has this magical ability to print money, and the government doesn't actually produce anything and can go into far more debt than you can. And that's how this system doesn't go from a world where, an individual can only go into so much debt. Not true of the government. And the government is part of the overall system, which is dictating this necessity to print more and more and more money.
And, you apply that on a global scale, and it's not just mortgages, right? As you said, it's auto loans, it's holiday loans, it's loans for your washing machine, your sofa, whatever people buy now on 0% finance and whatever. This is all contributing to and globally. It's not just in the US, because the US dollar is, the world reserve currency, basically.
Yeah. I mean, yeah, it's a microcosm of, I describe it in the terms of the dollar system, but the dollar is the global reserve currency. So there's more dollar denominated credit cross border between the US and other countries than any other currency by 10 times. I think the euro is the next largest. But even if you were thinking about in the UK or in the Eurozone, the same dynamic exists. The ratios might not be as wildly crazy as the United States for the reason that it's not the global reserve currency, so the power can't be abused as much. The larger the beast, the essentially the more debt you can go into because you're masking it across more people in the economic system that are using the dollar.
Okay, so now Bitcoin. So like you say here, Bitcoin is not backed by nothing. We have a parallel system here, Parker, which people need to fully understand especially if they're new to Bitcoin. So how do you explain this to people that are coming here? One, that want to sharpen their tools and in explaining this, and two, are just here to learn for the first time. How is Bitcoin backed by something?
So where I would start, kind of again, always in summary to catch up, it's that we've proven or at least established the arguments for why the dollar isn't backed by the things that people most commonly do, and that even in the dollar's context, what allows it to maintain some degree of value despite the fact that it's degrading over time is this property of scarcity. It's just relative scarcity. But that the notion of a money being backed by something is actually an incorrect context. There was a time where the dollar was backed by gold, and there was a time where the pound was backed by silver, and there was a time when all the currencies that preceded the euro were backed by some commodity money. That world no longer exists. It's gone. So then, and even when it existed, the proper question to ask would have been, well, what allowed the thing that backed the money, what gave that value as money? Because that is actually the best analog to Bitcoin. While we do need to understand Bitcoin relative to the dollar, recognizing the dollar never would have existed without gold. Gold was actually the economic good that emerged on the free market as Bitcoin is, as money. And so that this right proper context is not that money is backed by one tangible thing. It's that money derives its value based on the credibility of its monetary properties, and that there are certain properties that make a certain economic good better or worse at facilitating trade. And if you want to go into the full explanation of all of those properties, again, listen to Bitcoin Obsoletes Other Money. But the most important property, and that's an episode that Daniel and I recorded a little over a month ago, but the most important property of any money is scarcity. And so what I go into this piece is, and what people will oftentimes hear about Bitcoin is that there will only ever be 21 million Bitcoin. And what that represents is fixed scarcity or finite scarcity. And if scarcity is the most foundational property of money, and if the credibility of properties are ultimately what, quote, back any form of money, or more appropriately stated, or what allow money to store value and coordinate trade, then the proper question to evaluate in Bitcoin is then, well, what secures Bitcoin's fixed supply? And that's what I go then into detail for the second half of this piece. It's one of the Jamie Dimon, who's the CEO of JP Morgan, was recently in the news over here in the United States because Trump intimated that he might be evaluating Jamie Dimon as Treasury Secretary. And he also said that, Jamie Dimon had, kind of come around a little bit more to Bitcoin, or changed his tune, I think was the word. But about 18 months ago, Jamie Dimon was at Davos, and he was saying, well, what backs Bitcoin anyways? He said, how do when all 21 million exists, how do you know that it's just going to stop there and not keep going? And that, I think what he actually said was, how do you know that Satoshi's not going to pop out with a picture and be like, ha ha, I was just kidding. And it is the right question. It's like, well, how do you know there will only ever be 21 million Bitcoin? And so what I articulate in the piece are what in my view are the core security columns that back, that let's say back that help credibly enforce Bitcoin's fixed supply without the need for trust. And those three kind of core constituencies that represent balance of powers and contradicting powers in Bitcoin that fit together as a puzzle are Bitcoin nodes. What a Bitcoin node is, in short order, is a computer that runs the Bitcoin protocol, that has certain definitions of what is and isn't a Bitcoin. And one of the core things being that there's only ever 21 million Bitcoin, and any Bitcoin that are moved around have to have originated consistently with that fixed supply. So nodes do two principal functions. They validate all currency transactions as well as the history of Bitcoin and making sure that all prior Bitcoin transactions are valid, as well as nodes provide permissionless access to the Bitcoin network so that anybody can connect into the Bitcoin network, anybody can receive Bitcoin, anyone can transmit Bitcoin without a central third party censoring transactions. Not to say that someone can't work with a financial institution that can censor transactions, but what nodes do, they're actually the underlying technical root that allows for someone to peer into the Bitcoin network and facilitate transactions on a permissionless basis. Then there's a mining function, which miners run nodes, but they perform Bitcoin's proof of work function. It is what anchors Bitcoin's security model in the real world, which requires real world energy resources to secure the integrity of the network. What it was ultimately doing in securing the integrity of the network is ultimately writing new history to the ledger. What that writing of new history to the ledger represents is functionally clearing transfers of Bitcoin from certain wallets to others and doing that around the clock. And in return for that, getting paid in Bitcoin for security of the network or for clearing and validating Bitcoin transactions. And then private keys and cryptography. Literally how if there's, correct me if I'm wrong, but there's something like 19.7 or 19.8 million Bitcoin in circulation today. Each last one of those Bitcoin is secured by a private key, and that the private keys are ultimately what control the economic wealth and share of the network, and which are required to actually transfer. And so these three core columns really work together: nodes, mining, and private keys. And then the currency, though. The currency is this big piece that sits over it that really aligns all the economic incentives and allows those three constituents within the Bitcoin network to provide checks and balances against each other and ultimately ensure that the network can't be undermined and that nobody can undermine the 21 million fixed supply. So we can kind of maybe go into each one of those, but providing kind of the broader kind of high level backdrop.
Yeah, and a quick, you referenced the last thing we did, the properties, portability, fungibility, divisibility, and durability with scarcity or scarcity, however wherever you lean on the pronunciation of that word. That all leads to the credibility. So as you say here, in aggregate, Bitcoin is out-competing its analog predecessors based on the credibility of its monetary properties, which are vastly superior to any other form of money used today.
You want me to drop the mic, right? And so, and the core of it being that you have this, when I talk about those different pieces of Bitcoin security or what helps secure the Bitcoin network, it is ultimately not an end in itself of but what it is doing is ensuring the integrity of the 21 million fixed supply.
Mm-hmm.
It's ensuring the integrity of finite scarcity, which all other forms of money, they existed because they were relatively scarce to other goods that could also perform some function of trade or exchange, which is a core function of something fulfilling the function of money. And so thinking about absolute scarcity, something that's never existed in the world.
But
That is what
finite
Bitcoin
scarcity, right? Digital finite scarcity just blows my mind every single time. Like,
right.
I can't hammer that point home hard enough.
Yeah, and one thing, yeah, like there are things that are actually more scarce than Bitcoin, right? Like there's one Mount Rushmore in the world. There's um one Mona Lisa, right? So, and we talked about this quite a bit in the prior podcast, which is that that scarcity for scarcity's sake is not a value. And that's why these other properties have to exist within, or in concert, in aggregate, which is scarcity being the foundation. But then if you need something to act as a form of money or to be used as a form of money, you actually have to be able to transfer the scarce good. The scarcity is what allows it, if it's able to be transferred, if it is able to be divided and aggregated, and importantly being fungible to be functional in trade, that you need to aggregate these series of properties, and only the goods that do aggregate those properties can be viable as money. So just kind of clarifying for someone that's like, hey, there's other things in the world that are far more scarce than Bitcoin. They just can't be cut up in different pieces. They're not fungible. They can't actually coordinate trade. And so, while scarcity is the foundation, when you think about that, the mechanisms that allow Bitcoin to both be scarce as well as freely tradable are these other components. If I need to be able to transfer Bitcoin, I need to do it somehow. How do you do it? You do that with nodes. Nodes broadcast transactions to all other nodes. Well, if I have something that's finitely scarce, but I can't securely own my percentage of it, then great in its total scarcity. But if I can't personally secure it, doesn't mean that a bank can't secure it on behalf. I'm saying if it's not possible to secure a certain quantity of it, then certainly it's not going to secure value if it was easy to lose. Bitcoin private keys are what control, 1 Bitcoin, 1,000 Bitcoin, or 0.1 Bitcoin, regardless how small a unit or large a unit. And then importantly in Bitcoin, the validation of whether Bitcoin is or isn't a Bitcoin, or isn't originating consistently with a fixed supply of 21 million is done by two separate and distinct functions, nodes as well as miners. And so the important piece of that is that the validation of the currency is not tied to the ownership of the currency. It is this separate and distinct function that is also happens to be importantly anchored in real world resources, energy and power. And so when you add all of it up of this, mic drop, it has far superior properties than any other form of money. The fixed supply of the currency working in concert with the security columns that actually, both reinforce and validate that state of ownership and the total overall state of 21 million, that you have this perfect foundation of a finite supply of currency with the ability to permissionlessly, if you want to, send transactions, receive transactions, and also secure the network if you want to. So you basically have perfect fungibility with far greater ability to divide and aggregate, because while in total the digital unit is finitely scarce, you can carve it up into literally a fraction of a penny, or like the German government just sold 50,000 Bitcoin, right? They just sold on the market close to the equivalent of $3 billion. And so highly divisible, easy to aggregate, easy to assay. You can add, another way to think about the nodes function, when they're, giving permissionless access to the network, they are validating all other Bitcoin transaction, that is that is functionally the process of assaying, like assessing its validity. Is this a Bitcoin or not? Nodes can do that at de minimis cost.
Mhm.
So perfect scarcity, perfect fungibility, more so than any other form of money, the ability to divide into very small units, aggregate into very large units at very low cost, perfect fungibility. And all of this is happening with the tie-in of broadcasting transactions over a communication channel. So far more portable than any other form of money. But none of it could happen if not for this beautifully engineered system that has all of these tied in economic incentives, with the incentives and the structure not just being software code, but having basically checks and balances and separation of powers with the real world as a constraint in terms of power and kind of atomic energy.
So here's where I want to run this one past you, because a few epiphanies were dropping here. And you use the keyword credibility to
The
describe.
most important word.
Yeah, that is the most important word. And it suddenly dawned on me, it's like, wow, Bitcoin is credible. It has credibility, whereas fiat is creditable and survives with its creditability. That's like the complete, it was like, whoa, like, I don't know, like
Yeah.
that's where that's where I fell. It's like, fiat is creditable and Bitcoin is credible.
Yeah. The fiat system only works so long as the credit worthiness of the central bank
It's
sustains
upheld.
itself.
Yep.
And that is uh, degrading in an accelerating way.
Mm-hmm.
Um, and that it is not credible in the absence of the credit worthiness of the largest lender, the one that creates the money out of thin air to lend out, and that it is necessary in the world of Bitcoin that the money and the foundation of it is divorced from the function of credit entirely. That it is its own system with its own inherent properties that have emerged over time as people have adopted it, as money, as the systems gain strength, become larger. Because the importance of this word of credibility is that when people say there will only ever be 21 million Bitcoin, for somebody that is new to Bitcoin, they have to question whether or not that is true.
Mm-hmm.
Um,
Is that
of
credible?
whether, yeah, is that fixed supply credible? Is it defensible? Can it be undermined?
Mm-hmm.
And in order to determine on your own footing without taking the word of somebody else, you have to start to evaluate, well, what are the mechanisms in place that ensure that it can't be undermined? Um, and that's where getting into understanding how these uh, columns like nodes and mining and private keys work together with the actual currency itself. And also, there's a reality that in this day and age, where still so few people understand Bitcoin at a fundamental level, that that is necessary for someone to stand on their own 2 feet without relying on the word of any other man or human being as to whether or not Bitcoin is credible. But then sometimes the worry comes up, well, if everyone's going to have to evaluate this, there's no way that this is going to be adopted. And what I would point out to people that jump over that question is like, well, first evaluate whether or not it's credible. Because second, not everyone's going to have to evaluate these questions. That once there's a clear consensus that Bitcoin's money and you start paying your kids, you might want to teach the lessons so that they don't forget them. But the currency will just be working and it will always have been money to the future generations, just like you never had to figure out how a telephone worked for it to work. You just use it. In many ways, the first people that use Bitcoin are having to evaluate whether this thing that they're touching is fire that's going to burn them or is something that actually sustains itself and helps us all sustain ourselves. But not everyone's going to have to go through that same conscious dilemma for the reason that Bitcoin will just be and be affecting trade, but it needs enough people to go actually question it seriously, because there's a lot at stake.
And you round out the chapter with like, each time the Fed returns with more quantitative easing to sustain the credit system, more and more individuals will discover that the monetary properties of Bitcoin are vastly superior to the legacy system.
Yeah, and I think that that keys in on a point that money is not absolute. It is in competition relative to the pre-existing forms of money. I talk about this some in other chapters, but I really do not view Bitcoin as in competition with all other 1,000 cryptocurrencies. It's really competing with legacy stores of value and legacy forms of money. The dollar, euro, yen, gold, other commodities. And that so it is relative. The properties are objective, but they're evaluated relative to properties that exist in other forms of money or things that are used as near store of values. And that the core that anchors the dollar or any form of money today in the fiat world that doesn't cause it to instantaneously combust is the relationship to credit, because what the credit represents is real world assets. And if you don't demand the currency and pay the debt, that you lose not just a note, you lose the underlying asset that's securing the note. And that often means the shirt on your back or the roof over your head or the car that drives you to work that allows you to produce income. And so while that is what anchors any fiat currency's value in the world, such that it doesn't just immediately go to zero, it's also what dictates that more and more money has to be printed, because the imbalance is never actually eliminated. The introduction of money induces the expansion of ever more credit, which then induces the creation of money. It's like this, snowballing effect. And that Bitcoin divorces of that. And so oftentimes people have to combine some prior knowledge to something that happens in front of them, some real world lived experience, to then make Bitcoin make sense. For people that are listening this episode, it is the Federal Reserve, the ECB, the Bank of Japan, People's Bank of China, every central bank in the world is going to have to print money. And they're going to have to print money because of the imbalance in the credit system. And when that happens, whether it's in the second half of this year or next, it's going to be on grand scale. And then you're going to remember this conversation. And that you're going to remember the fact that Bitcoin has properties that are divorced from the function of credit, that they actually have inherent monetary properties, whereas all other fiat currencies emerged based on prior commodity monies that they were fractional representations of. And that in addition to learning something by listening to a podcast like this, people will learn something when combining this information with what's about to happen, which is, similar to what happened in 2020 and through 2022, similar to what happened after the great financial crisis in 2008. And it will happen again. The more people that are paying attention will connect that all that printing of money happens to be directly related to this thing, Bitcoin, because Bitcoin is what's fixing, permanently eliminating the ability for an outside third party to print your money.
And I think, like me, Parker, you don't even have hope. It's inevitable that people will, come to this realization. They will put in the work. They will question what's going on because it's right in front of their faces. And it's touch point after touch point after touch point until all of a sudden it's breaking point. And you're like, huh, I need to opt out of this.
Well, what I know is inevitable is that they're going to have to print money because of the imbalance between the dollar debt and actual amount of dollars, euro debt, actual amount of euros go to every central bank in the world. So that is an inevitability, like has to happen where the whole system combusts on itself. And even if they didn't, then the whole system, the credit system would combust on itself, and people would have to adopt Bitcoin as money, because that credit system based money would also stop to exist in either scenario. So that is inevitable. What's not inevitable is whether or not somebody really goes down the rabbit hole to understand Bitcoin, because consciously or subconsciously, they're going to end up at the same conclusion, which is they need a form of money that is working. And by working means storing value for to an adequate degree to allow to, essentially deliver some value in the world, receive money in exchange, and then actually get something of value back in return for it. And so they can either consciously evaluate these challenging questions about Bitcoin and consider it relative to the fiat credit system and the fiat based money system, and the reasons why they have to print money, as well as the contrast to that being Bitcoin, to evaluate for themselves whether they want to consciously opt in. But they're going to opt in anyway, because they absolutely have to have a form of money. It's just whether they do it earlier or later. And the people that are high agency go down the rabbit hole to want to know why, to evaluate, to figure it out, so they can be earlier rather than later. Because the earlier they are, the better off you're going to be.
And we would be remiss here, Parker, if we didn't shill Zapright, because some people might be listening to this and it's, oh yeah, well, that's great, but I don't have any money to invest into Bitcoin. And well, first of all, sell your shit, sell your chairs, sell your car, sell whatever you can to get some money. Stop buying the $7 Starbucks and whatever else. But if you are providing a good or service, then you can start accepting Bitcoin. And that's what you've built at Zapright with John. So if you want to talk to people a little bit about what that platform is, what it offers, and why it's important for people, merchants worldwide, to at least get themselves set up to start invoicing and accounting for Bitcoin and get ahead of the game. Wherever you want to take that.
Yeah, what I would say is that if you're still struggling to understand why Bitcoin stores value over time, pick up a copy of my book, listen to the prior podcasts that Daniel and I have done. We've done one on the first chapter of my book, Bitcoin Obsoletes Other Money, second chapter of the book, Bitcoin Not Blockchain. So if you're still scratching your head on why Bitcoin stores value and why it is and continue to emerge as a form of money that the entire world will use, keep going down that educational rabbit hole. For people that has started to click for, that have started to figure out why Bitcoin does store value over time, why people do adopt it as money, why the world's going to continue to converge on it as a form of money, the most common sense, logical thing to do is to insulate your businesses by being set up to receive Bitcoin as payment. If you have figured out why Bitcoin will store value, then accepting it directly in exchange for goods and services is the cheapest way to do it. Separately, if you figured out why Bitcoin stores value, you've figured out why fiat currency does not store value, you figured out why fiat currency is a risk to yourself as an individual. If it's a risk to you as an individual, it's a risk to your business. And receiving Bitcoin as payment creates a redundancy of rails in your business to reduce a risk. Bitcoin is helping you reduce a risk, being the currency you're storing your value in. Opting into the rails of Bitcoin reduces a risk by diversifying away from the fiat rails and the fragility in the fiat rails. What we're building at Zapright is for those people who have figured out why Bitcoin stores its value, that are running businesses or operating as individual contractors, that want to be paid in Bitcoin for their goods and services. So if you're further down the rabbit hole and that's starting to click for you, the logical endpoint is, well, I don't need, I can still continue to get paid in fiat currencies and convert that fiat currency to Bitcoin, but if I'm not also making my goods and services available directly, I'm getting less Bitcoin dollar for dollar, literally. And I have this exposure, which is single points of failure in the fiat system. And it's best to adapt before you absolutely have to. And investing in Rails ultimately protects your business and gives you direct access to your customers to be paid in Bitcoin. And the sooner you do that, the more resilient your business is going to be. So if you're interested in that, yeah, check us out at zaprite.com, zaprite.com, or reach out to me. If you submit a form, I'll get back to you on the website.
Cool. And if you use that code Bitten /Bitten, you'll get $40 off. Let's not forget to do the shill. And yeah, it's always fun to hang out, mate, and go into this. So we've already done 3 chapters. We'll keep going through it. Well, why not? I enjoy the conversations very, very much. Bitcoin is anti-fragile would be next up. So maybe we'll look at doing that next month and give everybody a chance to digest the last 3 chapters if they're getting caught up. So yeah, appreciate everything you're doing in the Bitcoin space. All of your writing, your work before at Unchained, and now at Zaprite as well. Yeah, I'm just happy that you're one of us, man. Thank you.
Yeah, well, I appreciate your friendship and appreciate you having me on. Look forward to going out and chopping more wood.
All right, love it. Well, have a good day, Parker. Thank you.
Appreciate it.